All right, everyone. I usually open this by saying, what an exciting day, but for once this year, it's not very. And I think we can take that. I think we can have some calm days. But as always, the game plan here today, I've got your chat down below there. So ask away for anything you want me to take a look at. But first, we're going to go over the market. We're going to get some kind of idea of where we are, what we're looking at overall when it comes to the SPY, crypto, a lot of these different sectors and industries. Is there anything that we can glean from the overall market? Then from there, I will start going through and answering your guys' questions when it comes to what it is you want to look at for individual stocks, individual names, cryptocurrencies, whatever. Let me know. And I just again, as always, I am a systematic trader. I'm a quant and I'm a technician. So if you're looking for financial analysis or anything like that, I'm not going to be your guy. But without further ado, let's pop into it. Let's go over to screen and then right here. This is why I say it's not the most exciting day in the world, but I think that's totally fine. Is we had this massive bounce on Friday. This is a really interesting candlestick pattern from just the old school textbooks about it. Called a kicker pattern. Basic idea: you have a big sell off one day, you have a gap up the next day, and then just a continuation that takes out that prior action. Just showing that everybody that had been shorting in this zone or lower is now wrong from a pretty big and solid candle there. That also changed the weekly chart so that this turned into a bottoming tail as opposed to just looking at, it was solid red on Thursday and made it a pretty good kind of hammer pant candle on Friday. So, really, when it comes to analysis on the market, I am to the point now where I've just picked this low. And that's, 550 is the easy way to put it, 550 on the SPY. If we are above 550, I want to be buying stocks from a swing trading point of view. I want to be buying things because we have a short-term low. Do I know the low will hold? No. Right? It could just reverse and we could sell off and make new lows. Absolutely. However, this is I think the third fastest uh, 10% correction or corrective market that has ever happened in the history of the S&P 500. So pretty quick down and pretty quick to hit this correction zone. We know that 75% of all corrections do not turn into bear markets. Only 25% of corrections turn into bear markets. So somewhere between now and another 10% down, there's a good probability that we are going to bounce. Looking like it could, for now, could just be a short term bounce, could just be somebody, buying the dip here. It could be shorts that made a whole lot of money covering. Who knows? But it just shows that if on a closing basis we can stay above this low, again, I want to be buying stocks because I think the risk is that it's, something like happened here in August where we had this corrective down move and this was the yen carry kind of blow up and then we just ripped and we imagine missing all of these days all the way back up to all-time highs. I don't think that will happen. It's not something that I want to bet on, but it could. And I think all that would need to have happened is some resolution to the trade wars, right? If there's some trade ceasefire or something, I don't know what you'd call it, that could be very interesting. But every time in the past we've gotten these corrective moves, they're met with explosive buying. If this is the time that doesn't happen, that's okay because I have to make the bet every time because that's what I've been seeing. So you get some sort of corrective down move, you get a pretty significant bounce. If it holds for a day or two and then starts to grind higher or push higher, then great. I've gotten a low that I can risk against. And if that low holds, then I want to be buying stocks on dips, on pullbacks, on things like that. If this low let go, I'll probably move back to cash like I had a little bit ago, and then we'll just wait. We'll wait to see what happens. So that's what I'm looking at. There's really nothing that's standing out too much from a sector point of view other than the very huge strength we're seeing in XLF. A nice big pop, a nice big push from XLF, which is our financials. Uh, I know quantum computing and AI and Ozempic plays and biotechs, these are all very sexy and interesting and fun to trade and all of this. We need financials to do well. We need XLI, which is industrials, and they're doing great as well. Financials give people money to build things, and industrials is them building things. We need these things to occur because these are the kind of markets that we can end up doing very well from an economy point of view, right? And you want the overall economy to remain high so that people have money to YOLO into whatever crazy quantum whatever that you're trading at the time. So these sectors have to be strong. And XLV, which is healthcare, that one's strong as well. You can see a lot of this from the heat map. So this is what's up or down on the day. Now, generally speaking, you want to see technology higher, but in this case, it doesn't have to be. And this is what rotation means, right? So this is what rotation is happening under the hood. I mean, consumer durables, right? Tesla being the tech stock down, Ford, GM, a lot of these more boring names up, right? We have Nvidia down, and then Intel up, right? AVGO down, AMD up. This kind of Christmas tree look, as I call it, when I'm talking to my buddy Jordan when I'm on the Friday morning show. This is what you want to see for rotation, right? We have finance. Look at the financial sector here is doing great, right? A couple things like a firm had really bad news that's down quite a bit, but Hood is doing okay. You have areas that are doing well, like consumer services is doing fantastic. So Disney up today, CCL and Norwegian Cruise Line, that one's doing well. A lot of these names are doing fine. So you can have these where pretty much most of the Mag 7 is down today, but the market's up. And a lot of these other sectors are doing it. So that's rotation. Why is rotation important? Well, you can't have AI lead the market up over and over and over again forever and just continue to rip higher. At some point, people need to take profits from that AI trade. And then what you want to see happen is them put those profits into something else, right? In bear markets, people sell the leaders and they go to cash. In bull markets, you want to see them sell the leaders and then go to something else. They want to go into finance, they want to go into industrials, they want to take the money they have made speculating on AI and they want to build things, they want to do things. So that's what you want to see, and in my opinion, that is exactly what we're seeing. So that's my overall case for why I think a short-term low may be in, but at least I know exactly where I'm wrong. If we end up breaking this low, I'm wrong. It's time to go, right? So that's all set up and it's all good to go right there. Again, we're holding on. If we go to the intraday chart of the SPY, it's just been a bit of a chop fest, just back and forth action all day long, which is fine. You had a big pop. It's okay to have a digestive day or two. But what you don't want is you don't want some of these sectors here to start falling apart. You don't want to see that as well. So I see a lot of rotation happening under the hood, and I am happy that I see it. And again, if this low holds, great. Hopefully, it's one of those things. So just before we get in, I see all you guys' requests, and I will certainly get to them. Just allow me to finish ranting for just one more minute. So I'm looking at kind of two scenarios, right? What we don't want to have happen is that we bounce like this and then we just roll over and take out that low. That's why I kind of say if we're below that low on a closing basis, it's over, right? Uh, we're probably going to start grinding lower, or we're going to be choppy down here for a long time. We're not going to get a pretty good bounce. That's the bear case. The bull case I see is some sort of a pullback, but that pullback is being met with right here. That pullback is met with some sort of buyers at higher lows. So as we're pulling in, there's people who are sad that they missed the downturn. They're sad that they missed the pop, and they're excited that yes, finally the market's pulling back a little bit. So I can buy that bounce, and I can buy that bounce and start to push us higher. That's again what I want to see. So no way of knowing which of those will happen. All we're doing is we're planning for scenarios as they come true. So that's exactly, I think, what we want to see. A lot of this, I think, is showing in the case that we're getting a lot of these risk on type plays again when it comes to robotics, quantum computers, all of this stuff that's hugely speculative will probably never be anything. But people are okay plowing their money into it because they don't think that the world's coming to an end, right? So ASTS, I'm currently watching this one as well. I talked about, this to me was the miss of a lifetime, the undercut of this prior support, and then it bounced through. Those are the kind of setups that I love to take. But right now we're just range bound, and there's a couple good takeaways I think to have from this chart. Once we're always looking for relative strength and relative weakness. There is some relative strength here just by saying and by showing that when the market sold off, this one didn't do too bad. You can't compare percentage to percentage because something like an ASTS is always going to move on a way bigger percentage basis than something like the S&P 500. But the fact that it held on to prior lows, that is pretty strong for me. Now, this is a momentum name. So there are names to buy on pullbacks, and they're, in my opinion, all of this, I guess, is in my opinion. But there are names to buy on pullbacks, and there's names not to buy on pullbacks. For me, the names to buy on pullbacks are very strong, slow, uptrending, grindy names. Things that they make money quarter over quarter. They're increasing the amount of money they're making quarter over quarter, and they're just kind of grinding higher. And they dip, and then they move to highs, and they dip, and they move to highs. Big profitable companies. These kind of names, and quantum computers, robotics, drones, all of that are kind of in the same basket, where these are more momentum names. So what you want to do is you want to find a moment, an event, like this prior low right here, or a breakout to new highs. These are events and where people get very excited. You start to see on stock twits it's starting to trend more, and people, the chat, the feed there is just lighting up, because these are momentum names. So momentum can carry these names huge in just a couple days. When they're range bound, they can be range bound forever. So ASTS didn't really go anywhere from September 2024 all the way to January 2025. I wouldn't want to hold it that long. It's just not doing anything, right? So I'd rather buy the thing as it does this undercut and rally and starts to rip, and then get out, right? These are, again, they're momentum type names. So that's what I look at when ASTS and names like this. If they're stuck in a range, just set an alert. Say, if you get outside this bound or this bound, give me a call, right? If it undercuts this and rips back through, that might be a trade. If it breaks back through here and just starts popping, that might be a trade. These type of names, you never know when the next event is going to be, and it could be range bound until those events. So that's the way I look at those names. So um, LAES. So I got something drawn out here. And sometimes you return to names, you don't know why, but I have this trade drawn out. I don't think I have this trade on, but maybe it was another time that I was chatting with you guys. But this is the kind of thing that I'm talking about, where this is now breaking out of a little bit of range and pushing. This is also, no idea what this company does, but this is also a momentum stock. This is a momentum type name, where, right, just got trash forever, went from $12, must have been a DSPAC, all the way to 20 cents, and now it's back up to $3. So, right, has a big momentum push, then comes down, does that little undercut and rally, just like we talked about in ASTS, and now it's starting to push up. Great, right? That's momentum that you want to see. But we're breaking this downtrend line, which is probably why I drew that the way I did. Right? Nice downtrend line right here. We're breaking, showing some momentum to the upside. So I like the look of this one. Just one of those, you got to stay as long as the getting's good, and then you gotta get out, because whatever this company does, it kind of hemorrhages a little bit of cash there. So the question is, can it get back to and through this area? Then that might turn this into a more bigger cup and handle style look. But the amount of action that's happening here is just insane. From 30 cents up to $10, back to $1.80, back to $3. So please be careful, right? This got Widowmaker written all over it. SNDL is weed, I think. I think. Yeah, so a couple reverse stock splits to stay alive, hanging out on lows here. This is not a great looking name and can kind of barely hold on, can barely get going there. That's not what I want to see either, right? That's not good, right? You want something more like the LAES that we just looked at. That thing's right, had a massive breakout, pulled back a lot, and now looks like it might be continuing. This is one of those names where it's just completely and utterly kind of sideways, right? So, um, and grinding lower. So it's got earnings. So yeah, maybe it could pop off earnings that tonight, tomorrow morning, it has earnings. So maybe something there. It's not gonna light the world on fire. I don't think. Right? You've got anytime I see a chart like this, right? Every time it bounces, there's sellers coming in. Every time it bounces, there's sellers coming in. I see bag holders, and I see people who are very much and dramatically looking for an exit point. Right? I've been holding this stock, and it's down 90 something percent, and now I'm looking to get out. So when I see this, and I think the quintessential bag holder stock is this AMC. Right? There's still people out there who probably think this thing's going back to $400 a share now that it's at 296. But most people have probably given up on that. So every time there's a big pop, there's likely going to be dramatic selling into that pop. Someone's looking at their account one day, they got a little too hyped up on that meme stock craze 4 years ago now, if you can believe it, and they're seeing that account value pop up, and they're like, "Oh, great, this it's finally bouncing here," and then they just hit the sell button. Right, my 99% investment that is down is now only down 80%. If I sell it here, I can get some money back. When you see things in downtrends like this, I just really caution people to say it's a lot of bag holders, right? And in the marijuana sector, this is another one. Same kind of thing happened. Was it Tilray? TLRY. This thing was yeah, off the gate 2018. Everyone thought marijuana was going to be the thing. I think this is when Canada legalizes as well. Went up to $350 a share, and then so there are people out there holding the stock from right 300 and 150 and 4 and 2 and 1. So if you get a spike in these names, there's so many people that are looking to sell, right? What I think is going to happen to the whole marijuana space is at some point that deregulation will happen that everybody's been waiting for years, and that will be a massive sell the news event, which I'm sorry, but that's just what I think will happen. And the winner is going to be a giant company like Philip Morris, someone who makes cigarettes and has farms and understands how to grow things and package them and push them out. And they are either going to buy one of these marijuana names on an absolute cheap, right? They're going to buy it for pennies on the dollar, or they're just going to create their own brand. I think they're probably going to buy an existing brand, and then kind of move on from there. Just buy it and say, okay, you're our brand now, and then use their farms and their growing equipment that they can do so well because they've done it for so long, and then push it out from there. So that's what I think is going to end up happening. But I could be wrong. I don't foresee a sector rotation where everyone gets really excited about marijuana stuff and does fantastic from there. Just like, and I'm sure we'll get asked at some point, just like the quantum computing names. I think the quantum computer winner will be Google, Microsoft, Apple, right? A lot of these companies, like Google, for example, their research division for quantum computers, where they just throw money and they know that money is going to get lit on fire, that's more than probably all of the quantum computing space combined, right? So if you're trying to build something like that, you're competing against the big boys, right? And I think that's a hard game to do, especially in something as capital as intensive as technology. So MVIS, this also has earnings coming up, so just note that on Wednesday after the market closes. and this one's just hanging out near support. So if you have some fundamental reason why you think this is going to be the low, you've got an out, right? That out is still a pretty distance away, but you could just take a support zone and technically you could just draw this and say, right, from $1 to 80 cents, that's like 20% or so. That's kind of if we're losing this area, it's time to go because this thing could potentially be continuing down. This is another one of those things that has kind of bear bag holders looking all over it again. I don't know if this is one of the meme stock craze, but right, every bounce is just getting sold into a dramatic way. So we're at these lows. Things are not looking good for the company. At some point, that there's going to be some defense of that $1 a share, that ever important $1 a share. Because for those who don't know, if your company loses a dollar share and you can't get it back, you get kicked off the exchange. So that's why you see a lot of reverse splits. You see a lot of just shenanigans taking place around $1 a share because the company will do whatever it takes to try to stay listed on the exchange because they know it's a complete death nail if they lose that. If you have to get pushed down to the pink sheets, that is not what your investors want to see, right? They do not want to see someone going from being listed on the Nasdaq to getting pushed down to the pink sheets. That's just not doesn't make anyone feel good. So um, yeah, so you could see some sort of news come out. They could, I don't want to say mess with, but they could make their books look really good for a couple quarters to try to keep them above there. But to break this overall downtrend from $28 to a dollar is going to take some magic. So this is one of those things that's where fundamental ideas and fundamental things come into place because it's again just hugely important that you end up doing something like that. Uh, you get something going. So you are all of these going to be are all these going to be stocks like this? This is kind of your typical de-SPACed company, right? Where anytime you see just for newer people, anytime you see a chart that looks like this, that means this was a SPAC for a long period of time. It de-SPACed and just completely fell apart from $10 down to a buck, and now it's just chopping around in this zone. I know it's a wide zone, but the way I look at a lot of these de-SPACs is that when you're in this area, you're kind of in purgatory. You're in the misery zone in which you don't have things aren't going up for you, they're not going down for you. You're just kind of trapped. You're trapped in this zone right here. Let me delete that or pause that alert that keeps going off. There we go. Um, so you can do. Stan Weinstein was very famous for this, doing stage analysis, where essentially stage one classifies as an uptrend, stage two is like a topping pattern, stage three is a downtrend, stage four is bottoming, that kind of thing. That's kind of how the market ends up moving. This looks to me, as long as you're stuck in this zone, you don't seem to be as bag holder as a lot of the things that I just showed, just because it dropped so quick that there's probably not a lot of places that people could get involved to buy. But again, you are just kind of range bound in this area. So it's not interesting to me unless it can get back up over 350, which is this high right here, or it gets to 120. And again, I know that's a huge range between those two things, but so far, one, two, three, four times we got up to 350. Sellers came in, and then right one, two, three times you could almost say it gets down to 120, and buyers came in. So it could just hang out there forever. And this is why I always talk about when a lot of these companies that, yes, if it goes from here to 361 and then breaks out, that's already a good trade. However, when you're in middle of ranges like this, it can almost be worse than being in a downtrend. Because at least, hopefully, if you're in a downtrend, you know things aren't going well and that you have to get out. If you're in a sideways trend, sometimes that's harder for traders to understand that it's time to get out. And then what happens is opportunity cost, which can often be as damaging, if not more damaging, than taking a loss. You buy a stock, the stock pulls back, you take a 5%, 5 or 10% hit on the position, and you move on with your life. If the company doesn't move at all for long periods of time, it gets really hard sometimes for traders to make decisions because they're like, well, I'm not down on it. I'm not up on it. It's just not doing anything. But if you got to look at the opportunity cost, which is I could have put my money somewhere else. I could be in something else as well. So for me, this is one of those things where, again, if it gets above this zone and it has a nice breakout, maybe there's a little shot to get taken there. But as long as we are just in this range, there's just nothing really for me to kind of sink my teeth into and go, yeah, this is a trade I want to make. The beauty of it is we live in a world where you can just set alerts. All right, set alerts. Say, hey, let me know when this thing gets to, I don't know, 325. You put your alert a little under that 350, and then you just walk away and you just move on with your life. Something else to consider if you're already in this name or in names like this that are shopping sideways is what's called a time stop. As a quant, I use these all of the time, where my time is not dictated so much on price, but it's also dictated on time. And the reason for that is to avoid situations like this. If I build a system and it says, you're going to buy this stock and then you're either going to wait for it to go up 20% or down 10%. That only covers two worlds in which I am stopped out or I have a profit target. That third world is the stock does nothing for 6 months. And then I miss out on all these opportunities. So, quite often, again, if you're trading something like this, you give yourself a time stop. You say, I'm going to, if I'm going to buy it here because I like it for whatever reason, sometimes the time stop is arbitrary. I'll give it a month. If it can't break out of this range in a month, I'll sell it wherever it is and put out my alert and move on. Sometimes it's event driven, right? Say this, I don't know, no idea what this company does, but I don't know. Let's say there's a drug and the drug is going to get approved at the end of the year. So you just say, okay, when the drug approval happens, if we don't break outside of this range within a week or so of after that, then I'm going to move on. That's another way to do it: is make an event-driven time stop or just a normal time stop, and just keep yourself out of this nightmare of right September 2024. It's in the same price. A lot of emotions happen through here for the stock to do seemingly nothing at the end of all this. TRVI. So yeah, this is something again that's a little bit more interesting to me because although it you avoided this kind of pain and regret zone, right? It came live at $8-9, went down to 44 cents, and now is back up to 650. So just a wild chart to begin with, just looking at that insane move. But something happened recently. There was some announcement recently that moved the stock higher, and they haven't been able to fill the gap. So the reason I think us technicians really love gaps and are really interested in gaps is because there's a lot of emotion around gaps. There's a lot of heightened emotion because if you're short and the thing gaps up, you're down a lot of money. If you are long and the thing gapped up, you up a lot of money. Or if you wanted to buy it and it gaps up, then you missed out on a bunch of money. So there's just a lot of emotions there that you can look at and you can pare back and you can say, okay, now that I know there's a lot of emotions in a particular zone, that makes it something interesting, right? A lot of these things we were talking about were just chopping in the middle of a range. They weren't really too interesting. This, right, big gap up, couldn't come into the gap at all, held the gap really, really well, and then did the same thing again so far where we gap up again and we haven't really challenged, right? That's the low of the gap. We haven't challenged that at all. So, as a momentum trade, I think things get pretty simple here where as long as we're not fading back into this gap, I'd be good to be long. I do have a strategy that actually looks for gaps to fade a little bit and buys them in on the gap fades. This might be a candidate potentially for that. Um, yeah, but you play off this emotion. Whatever news event occurred here got people really interested in the stock, and as long as that interest holds, i.e., the gap hold, then I think this is a great looking one. This, funny enough, is the best looking name that I've seen so far today. Going through you guys' questions, so That's one that I'm actually going to mark up myself. I like to buy them pulling back into the gap as opposed to this kind of gap and continuation. But if you're more of a momentum player, then you could certainly look to do that. Hollow. Ugh. Um, this company is probably going bankrupt. I don't know anything about them, but they're likely going bankrupt. They've done a couple reverse splits to try to save themselves. So, this company has never been $2,000 a share, nor will it likely ever be $2,000 a share again. What happens is, if, like I mentioned, if you can't stay over a buck, you get kicked off the Nasdaq. So one of the games these companies play is they just reverse split, which means I'm going to take a bunch of shares and I'm going to have less shares exist outstanding, and then it will artificially inflate my price, even though the economics of my company is still worth the exact same value, just a little bit more inflated when it comes to the actual price action, so that I stay listed on the exchange. Likely, the same thing will happen here again, right? Because it reverse splits, gets a little bit of interest, some news comes out, people sell, and then it happens from there. Like, I talk about bag holder stocks. This to me seems a bag holder stock. So this is one of those where, yeah, I look at this and I just look at I say there's so many people who are along this thing from, right, 3,000 all the way down to 84 cents, and they need something to kind of wake them up from it. And again, unless the company flips a switch and starts making a bunch of money, I you know this is one of those things that I think this company is likely to not exist sometime in the near future. I feel like I'm a downer today. Someone give me something that looks good. I feel like I'm just bumming everyone out. Rivian, I think so this area that I drew here before, I think was actually on one of these streams, and there's a couple of things to look at it. One is, do you think the current administration is going to be super jazzed to sell people and to help with selling of electric vehicles? If so, then right, maybe these things are worthwhile taking a shot. I'll give the same caveat I have with the other one, where you're kind of range bound. You're stuck between 18 and 8. Again, it's a great range, and there are people, there are traders and investors that make livings just trading inside of ranges and just over and over again. They buy when things are doing well, and or when they're at the low end of the range and they look like things are doing well, and then they sell when they get to the high end of the range, and they just repeat that process over and over again. And I think there's absolutely nothing wrong with doing that. You just need to know that that's the game that you're playing, and that you're not really pumped, or you're not really into looking for massive, huge swings, because if you're doing that, then the problem is you bought it around 10, you got super excited as it went to 18, and then bummed again when it went to 10. Super excited when it went to 18, bummed. And these ranges, again, that opportunity cost thing I've just been saying over and over again, is the um, you need to have a plan of maybe buy some and then sell some when it pushes higher, and over again. So if you think the floor is in for Rivian, that's fine. Again, it's a big time and capital suck to be in these names that are just range bound like this. If you think the floor is in, then look into some options or maybe ways to potentially profit off that while it does nothing, because these areas are essentially caused by value investors. That's what causes these long low bases. Is there's been some nerd somewhere, they've crunched some numbers and they think, well, Rivian is Rivian is right at this lows, and it's hanging out right at and near these lows. And I think, what's it, $11. I think $11 is a fair value for Rivian the way it is. So if it gets below $11 as a value investor, I would buy it. And that creates this bottom. The problem is those value investors only become correct when momentum investors start to see the same thing, and you start to see big pushes higher in the name. Not not seeing any catalyst for that, maybe even for the next 4 years. So again, for me, if it was one of those things, if I was trading it, I would probably be picking either support and resistant lines or just drawing very loose trend lines like this. And you don't have to be fancy with it, and just setting an alert and saying, let me know when this thing crosses this line right here, and just moving on. Then I keep my capital intact. But if Rivian is going to make a move, then I have a potential to get into it, especially in something like a Rivian, where they're not going to do anything that's going to happen. You're not going to wake up one morning and Rivian's $100 stock because they invented car 2.0. Like, it's going to be a slow move. The downside with treating everything like this is I might as well stay in cash until things happen, is if it's something that is like announcing a drug that the stock could literally triple or quadruple or something overnight. That's a bit of a risk that you have on missing that. Something like Rivian, I don't think you're going to have to worry about this thing just going to the moon out of the blue without giving you any chance at all to get in if you're someone who's watching it closely. Uh, the Goog, the Goog or the Google. These are interesting to me. So these are, I said right off the bat, there are stocks to buy dips on and there's stocks not to buy dips on. And these kind of names are stocks to buy dip on. Ever since the bear market was over, every pullback has been kind of met with buying. Now, the problem with massive name stocks like this is if you own the SP 500, you've already got a lot of exposure to it anyway. So sometimes it's just easier to trade the cues than these individual names. But it's been digging in for a while. I'm watching Google as well, just to see if we can get through this gap. So right above 170, where this gap is created, if we can get above 170 and start to move higher, then great. I think that's a good little trade to potentially see if the low is in here for Google. Now, with the whole quantum thing, quantum day coming up, I think that's going to be a massive sell the news event for these quantum computers that are all probably going to go to zero. These quantum computing companies probably going to go to zero. Because again, the big guys, these guys got the money to in order to do that. So it'd be interesting to see. I know we all know Google's working on their own quantum computing projects, so you would imagine that when these other guys, if people think quantum computing is going to be a thing, but they realize these other companies don't have the money in order to fund their operations for incredibly long periods of time, well, then Google does, right? Google's got its money. It got money to fund billions of dollars of R&D in perpetuity. So again, I think this could be a sleeper quantum computing name, if that makes any sense. Take-Two Interactive, video games. So this is, that's a very nice looking chart. So if you zoom out, we're battling all-time highs here. Right, so this is where the cup from the cup and handle that anyone who's read any TA textbook has definitely seen. This is where this kind of stock comes into play, where you had a high put in, and then a downtrend that turned into an uptrend, and now we're back to that high. And I don't think it's any shock that we struggled at that high, because you have, I talk about the bag holders all the time. You have demand at that zone, and people are chewing through this demand that's occurring right here at that zone. So if we can get through that demand and we can get through 220 a share, that starts to get interesting to me as a potential trade. So this one's definitely going to go on my list, because I like these trades that become very, very simple and easy to do, and I don't need to think too much about them. So this would be one of those where if we're above, you mark these highs. If you're above 220 or I don't know, 16, let's say, uh, you get involved. If we close back below 196, then you get out. So you're risking, what's that, $20 per share. The question is, do you think you can get from 216 and any more than $20 a share? If so, that ends up being a great little trade that you can put a trend following kind of nature on. So I like this one. Thank you for bringing this to me. I'm going to make a note. just to look at that one. So it's a good look. Who knows how long it will take to digest this overhead demand? That's happening right here. Could be days, could be weeks, could be forever. That's why I've kind of set the criteria of let's get a big push and a close above the zone. A weekly chart is another way to look at it, right? Where we hit that area and then it's pulled off. So if this is a little bit of a pullback and then we start to push higher, then yeah, I'll buy as it breaks out of the zone, and then my stop goes right under this wick right here, and then we see if we get a nice trend continuation higher that we could potentially play off of. Oh, there's Bruni. How you doing? UNMURNM. Uranium. So uranium is interesting because a lot of these commodities have actually. I went through a whole thing on Trader TV this morning, where right silver is looking interesting, getting near highs. Copper is looking interesting, potentially breaking out of a major level here. Lumber is looking interesting. A lot of these different metals and commodities and things that you drop on your foot, it hurts, have been setting up and doing very well. So URA is another way to look at it. You can see a massive level here. It was support all through this zone right here, and now resistance or was resistance, now support in this zone. So that's an interesting one that I want to take a look at as well. I think it's one of those where we need the either AI play to heat back up so that people get interested in uranium as a way to power it, or for people to disassociate those two things. Right now, I think it's tied up when it comes to it's tied up with the AI play. So the short-term moves are moving with whether AI is going to be a thing or not, and I think that's going to be that way for the foreseeable future. URNM. And right, uranium, this spot ETF, it's about the same, right? Roughly the same zone. Another way to play this one, I don't know if you know about this one, this is a good one. NLR, so uranium, it's uranium and nuclear. So not only do you get the uranium, it has URA and URA definitely in it as part of the ETF here, but then it also has some of these nuclear plays from large to small. Like it's got CCJ and CEG, but then it also has SMR and NNE, these like smaller uranium kind of plays, and that's NLR as an ETF. So I look at this one as well as just to give me a general understanding about how nuclear as a whole is looking. And it's if you look at the bounce that's happening right now, and then you compare that to the SP 500, a little bit more of excitement in uranium or in nuclear. So yeah, it could be one of those that maybe it is starting to get that little bit of dissociation from the AI play. It doesn't have to be so closely and insanely tied to that. It could have a little bit of a play around that. So that's very interesting that we have that push. So I don't know if NLR is the way I'd play it or URA, or there's probably some URX. I was supposed to say there's probably some triple leverage uranium future that if you wanted to get nuts on, you really could. So what's your opinion on Blackberry? Asking the Canadian about Blackberry. This is a bit of a sore topic for us because we were on top of the world at one point. We had the smartphone market before you guys knew what smartphones were. It was it just shows you what happens if you kind of rest on your technology when you're on top. So I think they're doing cybersecurity and stuff now. I think they're out of the phone game altogether. I think I read that somewhere. As a chart, it's interesting. You got to remember that this isn't, even though it's a $4 stock, it's not a crazy low float stock that's going to move a lot. So even though it's a lower price stock, it's going to be a slower, more boring stock. Right? It was $145 at one point. It actually did a split, so it was higher than that. So let's go back in here. Existed for a long period of time. Doesn't, so it's probably not going to go back there anytime soon. They've shifted business models entirely. So the question is, can it just continue to exist and it seems like it, right? They've turned things around a little bit where they're beating a little bit on earnings. They're not like hemorrhaging money the way they were. That's always a good thing. And from a technical point of view, this 450 area has been a huge level. So we broke 450. We came back and we're testing it now. So on a pullback, I think there's kind of an easy play to be made here, where if you like it for whatever kind of fundamental reason or even technical, you're getting involved in this zone. You realize that if we break $4, you're probably wrong, or early, which is essentially the same thing. And then if you're right and the thing goes back to 6 or it goes back to 10 or something like that over weeks or months or years, it's great. Just remember that all of this action right here, this was all meme stock craziness. Somehow, I don't know how, it went from GameStop to AMC to Nokia to Blackberry to they were trying to bring back every dead awful company that was shorted, kind of rightfully so now. But yeah, all these green arrows are earnings beats. So there's been a lot of that, that's for sure. The question is, right, can we hold this $4 area? If you like it, I think you lean against that zone. So X, someone was saying on the TMX Group Limited. Yeah, see, that's the kind of trend that I like. Right? Just nice. Don't need to think about it too much. When it broke out of this base right here, you're just able to buy it, put out a trailing stop. Could be what that Take Two Interactive ends up looking like, where you have a nice push up out of a base, it consolidates for a little bit, and then it off to the races. So yeah, that's a nice little look. I don't know if there's going to be many people here who trade the TSX like myself, but we can take a look at that. And we still have 13 minutes left. So any stocks you want me to go on to, I'm getting pretty close to the end of the list here. Make sure you ask there in the chat. I got that open. Yeah, and I saw a question in the QBTS, and you can see this is one of the systems I have. I actually want to buy it if it gets to 750 this week. It's a volatility playing system, so it's looking for buy the dip, sell the ripped up type of thing. But when it comes to these things as a whole, again, I'm not smart enough to talk to you guys about quantum computing and its likelihood. What I will do is say that it's the problem with hunting for companies that have a lot of technology like this, um, and are trying to create new technologies is you have a hard time fighting the big guys. And the reason for that is, if I was creating a drug and, I'm thinking, I don't know, mind med, right? I'm creating a psychedelic, right? And I'm going to be first to market with the psychedelic, which is the bet with this company. And if that happens, then it's going to do amazing. And this company is going to go from $6 to 60 or whatever. If it fails, it's going to go to zero. That kind of breakthrough is more likely to be seen inside of things like drugs, where you've got one thing, it's not insanely cost intensive to build. It still costs like millions and millions of dollars, obviously, to get a drug and to do trials and to take it to market and to lobby it and all of these things, right? It's obviously going to cost a lot of money. But when you're talking about building a quantum computer, something that a lot of people think is not even possible. Like a lot of really smart physicists are like, it's not possible. And then even you have, why is that saying that? There we go. The You have Jensen Wong and a lot of smart people out there saying even if we can do it, we're 10, 20 years away. Well, the problem with that and with these companies is the question is, do they have enough cash in order to exist for that long? Because if not, how they're going to raise the cash? They're going to dilute their shareholders. It's the only way they can do it. Whereas someone like Google, well, they can take that shot because if I'm allocating $1 billion a year to creating a quantum computer at Google, that's a line item. I just write it off here. Here's your department. Here's your billion a year. Go try to make your quantum computer. If you get close, let us know. Maybe we'll give you some more money to push it down the way. When it comes to these guys, I just don't know if they have the runway to do that. So what I look at it when I see something like this is this a getting everybody hyped up into an event and into this NVIDIA Quantum Day, which really means that each of these CEOs have like 5 minutes to talk, and that's it. It's like an hour or two panel, and there's a whole bunch of CEOs on it. So there's something that happens quite often in finance, and this has been a trade as old as time, and will probably continue long past we're all dead. And that's you point everybody at an event, and you point everybody at a carrot on a stick, and say, okay, I know a lot of you probably bought these stocks when they were way up here, and you chased them, and now you're down 50% plus on them. But there's this event coming, and this event will save you. You buy more, and you get hyped up, and you get hyped up. And then what you're doing is you're basically being exit liquidity for the largest institutions that are just dumping. They're the ones selling you the shares as you're buying them up. And then the event happens and the thing sells off, right? This is the buy the rumor, sell the news. It has just been happening since the beginning of time in trading. I fear, especially for the people who are here on StockTwits that I'm talking about, I have been in the threads when I was trying to see what happened with, what was it, QBTS? Is that the other one? Yeah, and everyone's getting super hyped on it. And again, my algorithm's saying if it gets here this week, buy it. So I'll do that because I just follow my systems. But it looks like it's one of those things where there's so many people so invested in this that this is a very hard market to create a brand new technology with interest rates as high as they are and competing against everyone else. Like Meta's playing with quantum computing and Google is playing with quantum computing. And you better believe if it's getting anywhere near what's interesting, Apple will just throw $10 billion at it and catch up. And then you have these smaller companies that people made a lot of money out of, but you know, it's these are very, very dangerous to me. I wouldn't get myself like psychologically attached to them. Now, from the chart, it looks great if it can get back through this level. Another one of those $11 down to 40 cents back to $11. Nice kind of rounded bottom or cup and handle here. But just understand, these are momentum stocks, which means as long as the music's playing, you keep dancing. Just have a plan to get out while the getting's good. So someone's asking about rocket companies. Interesting. This one is buying something. Is this the one that's buying another company, or is that just something that I made up? Um, I think the most interesting thing of rocket companies is right here at this kind of 1570, 1580 or so. When you have a gap down like this, and that gap down gets reversed pretty much immediately, it means that there was somebody waiting in the wings. There was some large institution that was saying, "Oh man, I really want it rocket, but oh look, I missed it. I really want it rocket. It's moving. Oh, if I ever get a second chance, I'll buy." The thing gaps down, and then they just start accumulating it almost immediately, and then pushing it higher and higher and higher. Um, that's great to me, right? That's kind of exactly what you want to see. So if we can get and close above this prior high, this is where people kind of got that fake out type news. It just says we're back to it. We don't care about this news. That ends up being a very interesting chart to me. It almost looks like they've copied the price action double. So whoever was buying right here was probably also buying right in this zone. So bought Redfin. Yep. So I knew there was something going on there. Yeah, so the fact that, and this is, it's very common. What you see often when a company says, I'm going to buy another company, you see this all of the time. You get those gap downs. So that shouldn't surprise anybody. The company that's getting acquired goes up and the company that's acquiring goes down. It's just pretty much always happens that way. So the fact that they were able to shrug that off and then start to push higher, that is something to me that shows that there's some underlying strength there. There's some people who are waiting for that dip to occur. and to buy it. Or even better, maybe some people are thinking that this merger might be a good thing for the company in the long run, and they were able to buy it up and push it through that zone as well. I think that's an interesting take as well. So yeah, this one looks good to me. And again, I think this the high of this candle is very significant because this is where the last kind of bag holders that got sucked into, right, they bought here and then the next day there was bad news and it was down a bunch. They're gonna start feeling good again if they get back through that price. So that's a good sentiment area, which again, as technicians, that's what we're looking for. We're looking for sentiment, we're looking for trend, and then we're just looking for areas of support and resistance where those kind of zones take place. So um, that's super interesting right there. So I got just a few minutes left. If someone wants to take one more question, I can do that. In the meantime, I'm going to take a look at seeing what's happening here on the SPY. And again, nothing's occurring. So we're not missing anything at all. Where again, this is exactly what I want to see today. I want to see a calm little push up, and then I want to see a calm little pullback in the next couple days, and that pullback to get bought. And if that pullback gets bought, somewhere in this zone right here, then it could be time that we start grinding higher again, which would be great for anyone that went through it. Okay, so we're gonna take a look at Amazon, and then we're gonna call it a day there. So Amazon is very interesting, in which I always want to look at this $200 level. And the reason for this, I zoom in here, is right. The candles look weird here. There's just a shelf at $200. Well, that was the man, the myth, the legend. That was Bezos, right? He was holding that zone. He was working out a large order of his own shares to sell. Uh, that to me makes that level very interesting because there's a lot of people who had to buy his shares. He sold a lot of shares, so a lot of people bought them. So there's a lot of emotion and price action that took place at $200 a share. So I think that's the zone. Right, we're below that right now, not significantly, but if we can get back above 200. So this is a trade that I'm currently planning out on Amazon. If we get back above and can close the day above $200 a share, then I'm interested in potentially getting involved in Amazon with a stop at around 190. So I'm risking from 200 to 190. I'm risking $10 a share. Do I think the chance that we could get back to 220? Do I think that's good? Yeah. So that's a 2-to-1 risk reward ratio. But right now, again, I need to see a break and then a solid close at or above that $200 a share, just because that is kind of the line in the sand. What's interesting and kind of worrisome to me is that we are actually down on the day and we are below Friday's low, whereas the SPY is up on the day and yeah, right here, and a push up as well. So relatively weak to the overall market, um, and that's not what you want to see, right? Tesla right now getting just shellacked while the market's doing fine. Again, it's not good, right? You want to see relative strength. You don't want to see relative weakness, and we are seeing relative weakness in Amazon. So that's something we have to keep in mind there as well. So chill day, which is good. Gives a good day to do some research, go through some tickers like this. I know I got a couple names that were interesting and some names I'm going to add and build little trading plans around so I know when and if to take trades when certain things happen. So I appreciate you guys giving that to me. I hope that you got some good feedback and some good ideas from here as well. If you did, again, do the likes and the shares and all the retweets and those things that we love so much. And until I see you guys on Friday, make sure you trade safe out there.